Well, thanks very much, Louisa. I've actually got Bob Diamond, who is CEO of Atlas Merchant Capital, with me. So I'm going to ask him about some of the main themes that he expects to unfold at the World Economic Forum over the next 2 days. Bob, thanks very much for your time. Obviously, Atlas Mara is the biggest asset within your investment in Africa. You've got a presence in 7 countries, and you're well placed to answer a question on whether the rewards outweigh the risks of investing in Africa.
Absolutely. I think, you and I have talked about this before, Bronwyn, but it takes patient capital. But the outlook for sub-Saharan Africa, from the demographics, 1 billion people, and average age, about half of that in the US and other developed economies, growing discretionary income at the level of economies such as India, 52 cities now with over 1 million people. It's just a very, very exciting opportunity. And our choice of investing was not just to focus on financial services, but to raise permanent equity so that we could look at this as an opportunity to build an integrated financial services organization in sub-Saharan Africa.
You're aiming to enter about 10 to 15 countries in total. Do you believe that size is important when it comes to dominating the financial services landscape in Africa?
Well, we wouldn't think of it as size, and I think our goal was both very simple but very bold from the beginning, to be the leading financial services organization in sub-Saharan Africa. Not the biggest, the leading and the best, and that means 10 to 15 key countries, not just the largest, but it also means we want to be in all 4 of the key trading blocks. But size matters in many ways. Nigeria is a very important market for us. 270, 280 million people, 1/3 of the, or more of the GNP. 1 out of 5 people in sub-Saharan Africa are from Nigeria.
Do you think size still matters in the global investment banking environment? Are we seeing global investment banks like the one you built at Barclays perhaps coming to a very short lifespan or termination of lifespan for that model?
I think the business model's changing because the changing regulation and the changing capital rules, for sure. Bronwyn, I would say it's very apparent when we're traveling as we are this week through the Middle East and in Africa, actually over 2 weeks, that much more of what we think of as the traditional investment banking business is not performed by just the global banks, but by those on the ground in the Middle East and in Africa. So the regional business model is growing in importance and in stature.
Just staying with the international banking environment, everyone is fixated right now with the HSBC review of their head office, which has obviously been located in London for a very long time. Again, do you think that this is a trend we're going to see, that suddenly now regulation in London is too onerous, it's too expensive to have head offices, especially when you have such a large emerging market focus? Do you think that again is a trend we're going to see?
Well, I wouldn't want to address the things that we hear HSBC may be facing. I'm sure Stuart is facing all of those head on, as he always has. But I think the context I would put it in is, for many, many years, really for 25 years now, consolidation, growth, increasing complexity was the trend, and universal banking had a capital advantage. And I think today there's a capital disadvantage in some ways for the universal banking model. Now that's not sufficient to say there is not a future. I think there's a very, very important future for universal banks based on customer needs and client needs, and those haven't changed, but there's not a capital advantage.
Bob, we're almost out of time. I just want to come back to Africa and the challenge of corruption. I cited this when I was chatting to Shankar earlier today from Standard Chartered, and I put to him that Transparency International has come out with a report identifying the 10 most corrupt countries in the world. 5 of those are on the African continent. Is it something that you see that is prevalent in your investment on the ground?
I think it's one of the reasons it goes right to the heart, not just about Africa, because there's corruption in many places, but it's why we raised permanent equity. We listed on the big board of the London Stock Exchange, and there's kind of a statement that comes with that around governance and around behavior and around how people should expect Atlas Mara to behave. So it hasn't been a challenge or an issue for us, and as you said, it's very different country by country, but it's not something that we think about just in Africa for sure.
Bob, thanks so much for your time.